Hi guys, so firstly let me just apologise for not posting a video on Wednesday. I was meant to post on Wednesday and then this video was meant to go out on Friday, and I had another video in mind for today about crypto, but unfortunately I had issues with my camera and yeah. Anyway, so Friday marked the end of the Trader v Trader challenge that I did with Stake, where I went up against Pete from Conversation of Money to see who could get the best returns over a 6-week period. Now, 6 weeks isn't a long time and it's not my style of trading, and if you want to look through sort of the initial videos and some of the stuff we talked about, then feel free to do so. But today I'm just going to show you a conversation that I had with Pete on Friday or Thursday night really, just to see who won and just our thoughts around the challenge, etc. I will put timestamps in because it is a long video and you might just want to know who won, but my key takeaway from this has basically been that short-term trading in any form, whether it's day trading or swing trading, is not for me, and I'm happy with my strategy of long-term investing, because whilst the stock market's crashed recently and it's just been bad lately, my sector was renewable energy, and the positions I hold in my normal portfolio for renewable energy, whilst they are down, the majority of them actually aren't in the red, whereas obviously this, because it was so short term, it was so in the red. It was just very sad, very sad. But anyway, I'm gonna leave that here and then insert the chat that I had with Pete. And yeah, don't forget that if you do want to get a free share of Nike, Dropbox or GoPro, my link is down below and you can check them out. If you look at my previous videos, I took you through the desktop version, which I think is brilliant. I know some people much prefer to have a nice desktop way of investing. So if you're interested in that, check out the previous videos. But without further ado, I'm just going to take you straight to the conversation that I had with Pete.
Cool. All right. Okay. So this is the final day. So this is reporting, people. Yeah. How have you found this entire thing, Anna? I've been stressed out. It's been one of those things that I've never had to think about, and knowing that it's there in the background and I should be paying attention to it more than anything else. It distracted me from what I normally do day to day, and it was always like, oh my God, what's happened now? I'm always constantly looking at the news, like what's moved, and thinking I need to do something, but being like having to remind myself, dude, you've got other things to do. You don't really have time for that. It's just been really stressful.
Yeah, I've logged into it far less than I should have. And after my last portfolio update, I thought to myself, I'm going to start monitoring it more closely. And when things go in the green, maybe start thinking about sort of just closing those positions.
Taking profits,
just to go more. Yeah, and then maybe putting that into like the bigger stocks like Tesla, etc. But pretty much until today, I've not had a single green position. So I never like got out of any of them. I was like, I don't really want to take the losses when they were so large. So it was only today that so like the day position today was in the plus, which was nice. But obviously the overall was still in the red.
Yeah.
I was like, oh no, I'm going to lose because every single position is red.
Yeah, Tesla's been a funny one, man. It's been like, I think overall it's probably like down 20%. I got out maybe like 2 weeks ago because I looked at it and I was like, because it started to stress me out, and because I knew that I'm holding them for a trade and not long term. Like I've still got Tesla in my personal portfolio, but because I knew that, oh, this is for this challenge and we're supposed to be making money, I just was like, you know what? I don't like this. I'm coming out. So I got out of, so I had 15 companies to start off with 2 weeks ago. I came out, I cashed in all of them. Pretty much, some of them were in the green at that point. And when I did the comparison, I kind of realized, well, actually, I did the right thing, because had I not cashed out, I would have been at a further loss than I already was. But from there on, I then went into 3 stocks, then went down to 1. So I had Apple, Amazon. Oh, Amazon was terrible for me, by the way. So just before they had their quarterly announcements and their numbers, I thought the numbers have got to be good. Therefore, the reaction on the market has got to be positive. So I went in pretty heavy into Amazon, and obviously it was down like 5%. So that really screwed me over for a point in time. I waited for it to recover maybe about 2% or so, cashed out. And then I ended up all in Apple because I was like, okay, Apple's been solid. Today is the only day where Apple's been kind of up today, because I started the day off and I was like, this is not good. This is not good. But it's actually rallied towards the end of the day. So it will be interesting to see the figures that we're both going to report here, because I really don't know. I know that energy had a really good spat at some point last week, whilst tech was still taking a pretty bad hammering. But it will be interesting to see.
I think I started off really happy because all my positions were like really in the green. And I had like one of the stocks, which I thought was going to do even better, was at like plus 20% almost at one point. So I think I sold out of like one of my positions and put most of it in, it was Enphase was the stock, and put more into it, and then everything crashed, and Enphase crashed the hardest out of all of them. And I was like, no, this was the one that I really like thought would sort of see me through. Alongside Tesla, but I sort of looked into it and it seemed like both of them had issues with suppliers and things like that. So neither have recovered. Both ended up like double-digit losses. So it was definitely nerve-wracking.
Yeah. Would you say, because I this kind of for me reinforces the fact that I don't have the patience or I just don't have the time for day trading. If I had more time, then maybe I would, but I just don't have the time. And for me, you're taking the calculated risk on outcomes, and you're searching for information to kind of gauge what you think a company might do on a day-to-day basis. But if anything, it's kind of reinforced that it is so unpredictable that you don't really know what's going to happen. I mean, Biden really has facilitated a lot of this stuff with, going after the tech companies for not paying taxes in the tax proposals and stuff. And, Tesla, for example, having a lot of bad press recently, and you can't control you can't control any of those things. So it's like, well, you've got that thick skin to do this. And it definitely reinforces my approach as a long-term investor, just invest in it, making sure that you're happy with the companies and leaving it more than anything else, and opposed to trying to dabble on the day-to-day. I just don't have the acumen or the time for it, really.
No, like you say, it's so unpredictable. And even big companies that will do well long term, like will go through periods of months of being in the red. And I think that I don't really have the stomach for it. And respect to people who do this as their jobs.
Yeah.
I couldn't. It's way too risky, because you can have everyone and their dog saying that, I don't know, this company is going to beat their earnings expectations, it's going to be great, etc. And then it might not happen. Like, you don't know. And even if it does, you literally don't know what's going to happen to the share price.
and to be fair, even with earnings calls, a lot of them, like Facebook positive, Amazon positive, pretty much all of them. Tesla was even positive. I think it's a weird scenario that we're in right now in terms of sometimes when it comes to the markets and stocks, the fundamentals don't make any sense anymore. And the markets don't react as you would think they would do based on those fundamentals. So typically, if a company reports stellar earnings, then you would imagine that everything will go up. But I think what has happened is because we're in this cycle where actually there's inflation fears at this point in time, 10-year bond yields going up, that people thought actually earnings call, actually they've had some great numbers, actually I'm going to take profits now and actually maybe move into a safer place, given that we have all of these areas of uncertainty coming along. And it's very, very hard to kind of be able to predict those kind of reactions, because it goes against the way the markets have traditionally reacted in normal times. But again, we're not in normal times. So, what can you do?
No, it's insane. I think generally, having been a long-term investor, apart from the initial couple months when I started off, when I was checking all the time because it was just so exciting, I've been quite good at just keeping out of looking at what my positions are doing and not really being bothered. But I think doing this really emphasized to me how in the short term it can literally be so volatile, that I don't know. I have so many people approach me and say things like, I'm thinking of doing this, just buying this, and when it's up like a few percent, selling out and just taking that profit, and then just repeating that to make like a little here, a little there. And it's just so risky.
Yeah, I mean, in theory, it sounds good. But the question then becomes, okay, so which companies do you think? Because, like, don't get me wrong, if you're able to do a 1 or 2% return every single day, like there's 365 days in a year, that's a 365% return potentially. That's huge. The trouble is picking the right companies that you think are going to be able to do it and being comfortable with that level of risk, because you just don't know what's going to happen on a day-to-day basis. And most people who will day trade or scalp, they will be looking for that 1 or 2%. They get 1 or 2% happy days. They're absolutely ecstatic at that. And yeah, it's just picking the companies and just being able to identify them and, sticking to your guns. One of the things that I surprised myself with was, when I did have a look at it, looking at the stocks that were down and thinking, I had a battle with myself. Do I close it? Do I wait?
Mm-hmm.
And I think a lot of the time it's like, okay, you have to have a plan going in. Okay, if it hits this amount, I'm going to sell, or I'm going to hold, and I'm going to hold for this period of time. It's weird how your human reaction is close it, especially at day trading. Close it, close it, close it, close it, close it. That's what I was thinking. I had to remind myself, right, hang on a second. We're maybe at the beginning of the trading day. So we've got, a few hours still to go. What's going to happen? But it's having a plan of knowing what you're going to do at any given juncture based on a number of scenarios. But I don't know. It's really, really interesting. But yeah, it just reinforces that I'm a long-term investor at the core.
Yeah, me too. I remember reading something actually which said something that I thought was interesting. And it said, even if you have 7 days of losses followed by 7 days of profits, you can still end up at a loss, because the losses could be larger. So there's just no telling. And I think it's like the risk of it and the roller coaster of it is not for me.
Yeah.
I like to think long term.
Yeah, absolutely. And I will say, actually, just on, because mid this, the Stake desktop made a huge difference for me. I don't know. I like real estate, and just being able to watch and see things on a massive screen, it made a huge difference with just being able to look at it on the phone. It did. And I'm glad that they actually launched this, because it's been a really good help. It just makes it a little bit easier as well, just to be able to take in information and look at accounts and stuff like that as well.
Everything. Yeah, see everything at just like a glance. Because I often found, like, with the app, you can only see a few positions at once. Whereas here, I could literally just go like show all positions, and it was just in one desktop. I could see all of them. And it was great.
Yeah, cool. So shall we do the results? Because I don't know what you've done and you don't know what I've done. And like I said earlier on our WhatsApp group, I think that you've probably pipped me because tech has been so bad. And like, it's been causing me
underestimating.
I don't know. Let's have a look. So basically, Anna and I, as we started to record this, we closed our positions. We screenshotted the stuff as well. So I'll probably post that on the video as well. But this is my position as it currently stands in terms of what I've closed at. So I closed down. So bearing in mind, each of us were given $1,000 each. I've closed down. At the moment, the balance on the account is $947.23. So that's a loss at this point in time during this trading period, because the tech sector has taken a huge, well, it took a hammering during the last, well, I would say probably 3 weeks, 4 weeks. It's taken a bit of a hammering. So I'm down essentially. So it will be interesting to see how Renewable's done, because they had a bit of a rally last week.
They did, but I think you underestimate how badly they got hit before that. So my final balance was 907.57.
That's so close though.
So close.
I'll tell you what, no lie, today, that portfolio was down at $913. Literally, Apple today, and the rally on Apple today literally made the difference. Because I looked at it this morning when the market opening was like $913. I was like, oh my God, right. Do I close this or do I just wait till the end of the trading day? Thinking, you know what? If it goes below, I definitely didn't want it to go below 800 because I was thinking if it goes below 800, that's going to be really, really difficult to recover from. So, great. Okay. Well, look, at the end of the thank you. But at the end of the day, guys, I think this has been an eye-opening challenge for me, definitely, because you just can't control the markets. And I really do think that sometimes when we say that, people underestimate what it actually means. And, you know, this is real money that we've been trading with. And if anything, it makes you think a lot more. It makes you second guess yourself a lot more. Oh, did I pick the right companies? Should I do this or should I do that? It's really, really, really difficult. And you need to have a strong mindset to be able to cope with this kind of stuff. Yeah,
completely agree. And the fact is, like you say, if you were at 913, was it 913 you said?
913 this morning.
Yeah. So that was what, $6 away from me, which is crazy.
Yeah.
And I think the other thing it emphasizes though is that you probably should make sure, I mean, I know we both talk about this a lot, but diversification.
Yeah.
Like having everything in one sector and that sector tanking, you're just like, oh my God, what is happening?
Yeah.
Whereas a lot of the others have been absolutely fine. So
yeah, I would definitely second that because if I had, because one thing I did do over the last couple of weeks, I started to have a look at other stocks that were doing well and the sectors that they were doing well in. And I was like, I almost wanted to message you, be like, can we change sectors halfway through? And I was like, no, that's moving the goalpost. But I was kicking myself thinking, oh my God, why can't I just go pick this sector that's doing okay? But, you know, diversification, really, really important. Don't put all your eggs in one basket because when things like this happen and things get tricky and difficult, where do you go pretty much? So, yeah. But all right. Well, look, this has been an awesome challenge to do with you. It really, really has. And thanks to the guys at Stake as well for doing this with us as well. It's been eye-opening to say the least. It really, really has. So cool. Yeah, eye-opening and fun. And I'm just gonna go drown my sorrows for losing. I know we're both winners at the end of the day. And I hope at the end of the day, people have taken maybe some lessons from it to see how they actually got on and stuff. But you know, the markets are so unpredictable. You know, if we'd done this time last year, imagine. That is true. Right? Because this time last year, Tesla was going nuts. Most of the tech sector was going nuts. Most of energy was going nuts. We would have been really into the profit. And that talked about timing. You can't time the market. You don't know what's coming around the corner. So. No. Yeah. I think that's a great parting wisdom. Indeed. Cool. All right, guys. Cheers for participating in this challenge. Again, if you haven't got the links to Stake, using them, they've got desktop now. There'll be links in descriptions. Bag yourself a free share in Dropbox, GoPro, and Nike. And you've got to fund it with 50 quid in the first 24 hours of opening your account. A Nike share is what, 130 or 120, something like that. So you get a chance to double your money, 1 in 3 chance of doubling your money. With the links that were put in the comments below and in the description. But guys, thank you so much for taking part and cheers, Anna. And thank you to all the guys at Stake, Andrew in particular as well. Definitely. Cheers. Thanks, guys. That's it for today. I will see you on Wednesday for another video. Bye.